Hi guys, for today's trade of the day, we'll be looking at the dollar CAD, and as usual, we'll start off with the monthly chart. Now, on the monthly chart, we see that the dollar CAD has actually made a very long bullish candle, and it actually spiked and touched the high of January 2016. This graphical level also coincides with a zone all the way back here in 1999, but that's too far, so we just want to focus on more recent prices. So I'll call this the long-term intermediate resistance, because price is very, very close to the level now, and this level seems fragile. It might be broken or it might not be. What we're going to do next is also to find Fibonacci ratios that will fall in line with this level to tell us that this level is a strong resistance level. So since this is on a big time frame, I want to take a retracement from the swing high in 2002 all the way to the swing low in 2007, and we see that right now the dollar CAD is actually right on the 78.6 retracement level. So this is a strong level, is a key Fibonacci level, 78.6 retracement, and price also spiked there twice. The next long-term resistance level that I see will be the historical high here. So let's call this the long-term resistance. And what we're going to do now that we have the long-term resistance and long-term intermediate resistance, what we're going to do now is find the long-term support. And what I see here is price is actually currently in a sort of a triangle pattern, right? This triangle pattern could be a flag pattern, because if you see there's a strong impulsive move upwards before price goes sideways into a flag pattern, and we know a flag pattern is a continuation pattern. With a breakout, price could just make a push all the way higher, but we will only do our analysis and we only confirm that on the lower time frame. And right now we want to look for the support. Graphically speaking, I can see that there is a support level here, long-term support level. Likewise, what I like to do is to use Fibonacci retracement and extensions to find confluences at this level. So I'll take a retracement from the swing low all the way to the spike here, swing high. We take out all the ratios, and we see that price is actually quite close to the 50% level. So maybe I should back it up a bit and put it here instead. So we have our long-term support, we have our long-term resistance. And with that, let's go down to the weekly. On the weekly chart, we just want to focus on this area, because that's where the most recent price moves are. And we have the long-term support here. So I want to find whether there are any other support levels. Graphically speaking, I can find one here, because price rejected off this area once, came close and rejected off a second time. So let me just put this level inside. Let me call this the weekly support. Same thing, I want to do a retracement from the swing low to the swing high, just to see whether there are any Fibonacci levels that we can find confluences with. And we have the 38.2 retracement level. It's interesting to note also that our long-term resistance, the historical high back in 2002, falls in line with the negative 61.8 Fibonacci retracement. So maybe I'll just keep that ratio there. Okay, so we have the ratios there, and I want to see whether this intermediate resistance is also shows any Fibonacci levels on the shorter term time frame. So we can see price move made a zigzag in this manner. So we take the extension, Fibonacci extension, and we use this as the first point, second point, third point, and we see that price actually made a one-time push to this area. So this is definitely a key area. Right, so I'm not going to change this intermediate resistance. Seems like also could be a very strong resistance. Now that we have the weekly support and the long-term intermediate resistance, let's go down to the daily. Let me tidy this up. I can remove the long-term support because it's too far away for now, so we'll just look at the weekly support. Okay, so this is the current price action that we have, right? Price actually drifted upwards slowly since 2017, and then it made a sort of a sideways movement for a big chunk of 2019, and then in 2020 we see overall the Canadian dollar weakness with the US dollar pushing higher. So now this is the zone that we're at. Let me just highlight this zone. Okay, so we're on the daily now, and with price moving so extremely, and we see that there's a lot of volatility in the markets overall. I will use the daily chart for presentation instead, so things are easier to see. So right now, I want to find whether there are any other intermediate supports along the way here. So I'll take a retracement from the swing low all the way to where price reached the high, and I'll open up all the Fibonacci ratios. And we see that the weekly 38.2 falls close to the weekly to the daily 61.8 Fibonacci retracement. And if I were to zoom into this area, there seems to be a graphical 38.2 retracement as well. Right, so what I want to do is I'll highlight the 61.8, 38, and I will also highlight the negative 27.2 as the next level. So our daily resistance can be here. Okay, because our long-term resistance is still a key level for me, I'm just going to leave it there. And now the view that I have for dollar CAD going forward will be what I expect to see is actually, since price is currently in a strong resistance area, I expect price to push down towards this level. Sorry, let me add that level in there. Level. This is what I expect price to do. Expect price to push down to this level first. Right, and once price is at this level, we should see a pause back up to this intermediate resistance. So I will use the intermediate resistance level as my entry. I'll play down to the daily support or possibly even to the weekly support level. Right. Should price break above the daily resistance, I can say for certain that we'll see price rise further towards the long-term resistance. So for now, this will be my entry, this will be my stop loss, and this will be my first take profit. That's all for today. Thank you.